Hello, everyone, and welcome back to our podcast, Bringing Business Recovery Expertise to Romania. In our last episode, we uncovered the essential strategies for business recovery in Romania, featuring insights from Eleni, Morten, and Diana. This time, we are taking a fresh look at things as we shift our to focus about Denmark. We have an incredible new guest who will share valuable perspectives on how Danish entrepreneurs tackle challenges, focusing on preventing and resilience. Before we dive into our discussion today, let's recall our amazing guest from the last podcast. So, we have Morten Moller, the project manager of Early Warning Denmark and secretary of the Early Warning Europe network. Welcome, Morten.
Thank you very much, Gabriela.
And we have Diana Maria Georgescu, the founder of Women Esteem International and mentor of the Early Warning Mentor Academy. So welcome, Diana.
Thank you, Gabriela, and hi, everyone.
And now we are excited to introduce you a new guest, Anders Delcomin Larsen. He is a highly experienced executive with an extensive background in international business leadership. His expertise covers value optimization, internationalization, and sales across industry like services and trade. As an executive vice president at Falck, a global Danish rescue company with a turnover of 2 billion euro, Anders oversaw operations in Europe, Asia, and Emirates. Since 2018, he's transitioned into serving as a board member for 9 companies, offering strategic insights into internationalization and governance. Additionally, Anders is an experienced mentor in the Early Warning Europe network, where he's successfully supported over 20 companies in distress, helping them navigate tough times. We are eager to hear his valuable insights today, so welcome, Anders.
Thank you very much. Thank you for inviting me.
I have a question for you. As a mentor with Early Warning Europe, you've seen the impact of early intervention on struggling business. So what specific strategies or resources used in Denmark would you recommend to be adapted for Romanian entrepreneurs to prevent business failure before it happens?
Well, the easy question is get enough money on your bank account. But I know it's a little bit of a funny thing because everyone is lacking money running their business. But I think there are 2 things I would like to point out. Of course, this is a very wide area and that it can be very different from business to business. But there are 2 things that I have seen really working well, preventing coming into distress. And one thing is, most people, they say, okay, I can lend some money, but I don't need it, so I don't want to pay the interest. I find it a very, very good life insurance for your company to get the money when you can. When you have your business running well, you can get loan. Take the loan, put them in a bank account, lock it down so that you cannot just take it, but have it as a buffer for bad days. And I know that it's expensive in interest, but you have to look at it as what does this cost me a year to maybe have 200,000 euro, whatever is matching your company, standing on a bank account, paying the interest, having it as a kind of life insurance for your company. The day when you need the money, it's really difficult to get it. Mm-hmm. So if you look upon it as an insurance, take the insurance. That's one thing. The other thing is that's the risk analysis. I have seen many entrepreneurs really, really good at what they're doing, but they do not always look upon the risk when they go into a new venture or a new client or whatever they do. And it's very, very easy to make risk analysis. And if you do it, you will very, very fast find out that, okay, this might be a low probability for that this new venture will fail or this new client will fail. But the negative impact could be very, very high on my company. And if that's the case, if that's your analyze on a new venture you're stepping into or a new client you're taking in, then you have to find out, can I mitigate this risk? Because if you mitigate it up front, you have a lot of tools to mitigate. If you're standing in problems with this maybe new exciting client having a big turnover, maybe doubling your size of your company, whatever it could be. If shit hits the fan, it's very difficult to mitigate. But if you can do it upfront, there's a very big tool package where you can say, okay, this risk is too high for me. How can I share the risk with someone else? How can I mitigate the risk so I can sleep at night, even though that I have taken in this new client or going into this new venture? So I think risk analyzers and starting to do that every time we make something new, we just have to make our risk analysis X, Y axis, probability, negative impacts, and see where do I end up. And if it's too high for me, then I have to find out. It's not that you shall say no to the business, but you have to mitigate. Say, what can I do to minimize the risk going into this new path? Because everyone wants to go into new path, but we just make sure that we have thought about the risk. I think these two things: get money when you can, save them, lock them in, and do your risk analysis. If you do these two things, I'll say that 80% of all the troubles that I have seen would have been solved by doing that upfront.
Mm-hmm. You spoke about the money. What is the best moment for a company to have this access to the money?
Well, we can turn it around. When you are in troubles, it's very difficult. So you can take that point and say, when you're not in trouble, it's easier. So depending on, is it a new started company? Maybe it's a 20-year-old company having running, almost okay in many years, not too high, not too low, but they still might end up, and that is what we see, and Morten, he can support me in that. It is not only new startup companies we are out to help when it goes. It can be companies who have been working for 50 years and having had a steady company, and suddenly something happens, a war somewhere, a ship in a canal turning around, and I don't know what. A lot of things can happen where you suddenly say, well, I have never thought about that this could happen to me. And in that point of time, it's very difficult to get the money. But before that, it could have been easy. I'll not say it's easier to get money, but there are times where it's easier than other. And instead of just saying, well, I don't need them now, let's say, well, I need to have the buffer.
And these consolidated old companies, I mean, the feature they share with the young startups is that when this unexpected problem happens, they are in virgin territory, in completely uncharted waters, just like the startups are, because they were never prepared for that particular thing. It could even just be a succession, parents to children in a company. They've never tried that before, so it doesn't matter if the company's been running well for 50 years, because this particular situation is new to them and they don't know how to act in it.
This was a good input, because I don't think that Romanian entrepreneurs are thinking in this way, to have access to funding when they are well. You talked about risk management, and I want to ask you if the Danish entrepreneurs are used to work with a plan of risk management.
The answer is no.
Okay.
And that's why I say it, because you can eliminate so many problems if you're just thinking, whenever you're stepping into new territory, what is the probability that this will harm my company, and what is the impact? If the probability is high and the impact is low, you could say, well, shall I spend my time on this? If the probability of failure is high, could I spend my time with something better? Okay, that's one answer. The other, if the probability is very low, but the impact could maybe even kill the company, then you have to think about, can I mitigate this? And am I willing to take the risk that the company go down? Have I personally collateral in? Will I also personally go down with this? So you need to make sure you have thought about this in the time before it happens. And if you start doing it all the time, and the reason why I'm saying it, because all big companies are doing this every day, but small and medium companies, they are too busy doing their business, and they think, well, I know what I'm doing, until the day something which they have not seen is hitting them, and then it's too late. So if you learn this all the time, whenever say we want to take this client in, we want to step into this country, we want to take this new product in our product portfolio, whatever, make a risk analysis. And maybe you will do it wrong, but you will do it at least. And you will maybe sometimes stumble over, oh, maybe the risk is too high. Maybe I will ask the client to take half of the risk. Or maybe you will ask your supplier of your raw goods, whatever you are buying in before you are selling it again, saying you have to take part of the risk. I have a huge client and he can buy for so much, and I have to buy some of the stuff from you. You have to take half of the risk. There are many things you can do, many things. But if you think about it all the time, if you have it as the same as you're good at billing your clients and you're good at everything in your business, you also need to be good at looking at your risk analysis. If you do that, I'll say most of the problems we are seeing would have been eliminated if people have done it. And all huge companies are doing it. We just need to, scroll it down to something that makes sense for the owner. We cannot take this full package with 40 pages and put it in a small and medium-sized company, but you can bring it down to some very small tools, which gives you at least maybe 80% of the risks you can eliminate by having a small tool. But I think it's the absolute best advice that I can give. That is, start looking at risk analysis as a normal thing in your daily business life. It can sound negative, but it is very positive, I'll say.
No, it doesn't sound negative. It sounds like a practice.
Yeah,
it sounds like a practice that we need to integrate it in our business, in all the levels of the business.
Right.
Thank
Fully
you.
agree. That is my message. Yeah, you're right.
Diana, Romania's mentoring programs like Early Warning are in a growth stage, and we know that. How do you see this system evolving to better support entrepreneurs, especially compared to Denmark's more established networks, like Anders said, with the mentoring program? So what lessons can Romania adopt from Denmark to improve early stage intervention?
That's a very good question, and I will come back to Anders' answer. I will link actually my answer to his answer regarding risk analysis. So in UEMA programs, we have a lot of tools. We developed a lot of tools that are helping and supporting entrepreneurs in early stages, but also in late stages of business development. And it's the same thing in the Romanian business environment. As Anders said, people are not thinking, entrepreneurs are not thinking a lot of risk management. And researchers have actually proved that the mindset of an entrepreneur is not to think about risks. So usually people that are starting businesses are not thinking about risks. So I think the major point here in this kind of programs is to develop this kind of networks in Romania as well, to support entrepreneurs that are vision-oriented, that are their mindset are built in a different way than people that are focused on risk analysis. So I think an entrepreneur, and what we can do in Romania, we can help them understand that it's okay, your mindset, it's the mindset of starting a business, because risk analysis people are thinking at a lot of risk, at a lot of things that are not prone to start the business right away. And make them understand that they can do a good team with a mentor, with a business mentor. So the business mentor can look at the risks in the market, can look at use a lot of tools that Anders spoke about. So the easiest tool to state the first risks is SWOT, and we all know it. So it's not such a big thing, but it can work very well. So from my perspective, we can develop this network in Romania, and we can teach entrepreneurs and business owners to build a good team, to team up with a business mentor that can help them grow their business, looking at risks, advising them to put aside those white money for the black days, as Anders said before.
Yeah, good, good way of pronouncing.
So that's the opportunity that I see in the Romanian market, but not only in the Romanian market.
Yes, Diana, you said about this, and it is a good way to understand that the market of Romania needs to be learned about risk management, because yes, we have a good mindset, but thinking of the risk not quite often we have this in our mind. So thank you. Morten, in Denmark, there's a strong culture of entrepreneurship with an emphasis on risk-taking and innovation. So from your experience, what step can Romanian entrepreneurs take to foster a more innovation-driven culture, especially when it comes to preventing potential business challenges before they arise?
Well, the whole thing is about resilience at the end of the day, and resilience comes from preparedness. I think Anders made some great points about that. It's also such a sector-specific thing, and yes, Denmark has a good framework for starting your own company, but you still need to do a whole lot of things on your own. Risk management plans and all these things. And I would say if you look at it, startups with 2-3 associates, there's a big difference whether this is a production company where you know perfectly well that you may not be able to sell your products, versus if you're a hairdresser or a builder who generally, from at least the cases we see, they don't have these plans and strategies in place, and if they do, then they don't follow up on them. So really getting the basics right from the beginning, and that means recognizing that you don't know everything yourself when you start a company, and it's a bit of a cheap advice to tell people to ask for help also, because if you come straight out of vocational training and you want to start your own company, chances are that you actually don't know a lot of people in your business who are not also students or complete new startups, but really seeking help with more experienced professionals in the same business, hearing what were the decisive factors that made them successful, what were the obstacles that they encountered. Make sure you get as much information as possible when you actually start, and then, as Diana said, make your plans, make the SWOT analysis, make your budgets, and so on. It's really about setting a solid framework before you start.
Mm-hmm. Thank you, Morten. Anders, we know that Denmark's business landscape is more mature and diversified, while Romania's market is still evolving, is still in this process. So what lessons from Denmark's established industry can Romanian entrepreneurs apply to take advantage of this growth phase and avoid common traps in early development stages?
Yeah, that's a good question. I think that maybe a little bit along the lines Morten says here, get some people around you. The funny thing is, if you ask for help, typically people will say yes. So it's quite easy to get help, as I see it. You can see now we have established this early warning. I know this is very much about companies stepping into crisis, but I see a lot of network where people are offering their help to companies in advisory board, in executive boards, whatever. And of course, you think, okay, I don't want to have 5 old gray-haired guys sitting here on my startup companies, I having all the good ideas and they are all the no-sayers and so on. I don't think this is how it is. What I would suggest is try to reach out, maybe also abroad, saying, I would like some people to speak to about my startup or my company, and are there anyone here who wants to be a part of my advisory board at least for half a year? And then you have some people, and maybe these people know other people which are more relevant and so on. So I think it's very much about gathering a kind of football team, because you have different roles when you are playing the football. And that's a little bit the same if you are a small company with 3 employees or whatever, as you said, Morten. there's a lot of competences you are lacking, not making mistakes. And if you are reaching out to people who have been there saying, could you be advisor for me? I think you come a long way with a good bottle of wine for people, because they want to put in their expertise. Maybe for the long run, they would like to be in the board or whatever. But in a startup situation, there are really many people who say, well, I would like to give a helping hand if you ask. So ask for help, gather an advisory board with different competences around and saying, it's my company, it's my idea, you have to help me. I think that's the best advice I can give.
This is about networking and community, because in there you can find very good connection and also partnership. I saw that most of them are facing the same situation, and after that they are thinking to go in the same direction and get to be a partner in the same project. So yes, the power of the community, it is essential. I agree with you.
Yeah.
And
Thank
I think
you.
actually, Gabriela, if I may add just shortly to this one,
Yes.
All these companies going through a business transfer from parents to children, why not consider the retiring generation, the founders, why not consider them as a resource here? Now they're pulling out of active business life, but they still have so much to share, so much knowledge. They know exactly what it's like to run a business in this local area and so on. Consider them as a resource. And as opposed to the successors, they actually have the time now to go and help someone else. And many of them, as Anders is saying, many of them are actually really interested in giving something back to the industry that they know.
Yes, true, Morten. Diana, we know that Romania is focused more and more on global expansion. So what do you think Romanian businesses need to prioritize to compete better internationally, especially in terms of avoiding challenges that could stop their growth?
To compete international, I don't think it's about competition, first of all. I think it's about collaboration in everything we do, because the Romanian mindset is based a lot on competition. We are, unfortunately, an individual culture, individuals and self-centered culture. So I think we need to switch a bit our focus and our mindset for competing against each other or other countries. That's why we are good at sports, I think, because we are good at competing. So I think we need to develop a mindset of supporting each other, collaborate with each other, find the opportunities between businesses, Romanian businesses, but also between businesses, Romanian businesses and businesses abroad, between Romanian business owners and mentors abroad, as Anders said before. So I think the key in the Romanian mindset is here. We need to be more focused on collaboration and supporting each other than to compete and become number one, I don't know, internationally. I don't think it's about that, because today you are number one and tomorrow you can be number 1,110. So it doesn't matter in the end, right? It matters the contribution that your business can bring to the society, it can bring to the world, and how you develop your business. And I think helping each other and supporting each other is the best way.
So Diana, from this collaboration, you can see that can be an expansion or to another level for some companies from this collaboration with other countries.
Absolutely. So open ourselves, because it's true that a lot of businesses are thinking about, a lot of business owners are thinking about their business to expand them locally. But there is a lot of market globally. And we don't need to be alone when going abroad. We can team up with other people from other countries, like this program, IWEMA program, teaches all of us in the end, right? That we can team up, put our knowledge together, and develop new ways of supporting each other.
Thank you, Diana. So now I have a question for Anders and Morten, because you are from Denmark, and I want to ask you if you can share a success story of a Danish business that has benefits from the resources and the connection provided by the early warning.
Oof, I think we have plenty of cases, don't we, Anders? Does any come to mind for you?
Well, yes, there's one special case which was, as a matter of fact, very, very complex, even though it was a small case, but we succeeded making it. It was two shops, and one was for female clothing and the other was for male clothing. And these two ladies, they have understood that they were stronger together. So they have merged their two companies in an equal merger. So now they have only one shop, but they have rebuilt everything. And then suddenly they found out that one of the shops has a very, very big default, and they didn't know it. And it can be difficult with clothing because you have season, you have sales, and you have stocks, and it's quite complex. And one of them had a very bad accountant, and they found out that it was really threatening. But now they have merged the companies, and now we have, in principle, two companies going down. We tried to help them out. First of all, we have to split the two companies again. That was quite a work to do, but we did split them up, so we did have two business registration numbers. So in that way, we had saved at least one of them. So that was the first thing. The other was that, of course, like typically, the bank have taken collateral from her personally and in her stocks and in her business. Everything was handcuffed around this. And the thing was, it was so bad that she had to go bankrupt. There was no way out of it without knowing it for a long time, but it was really bad. And there was a divorce involved as well. And so it was really bad, and it would have destroyed her family for sure, because, there were children, horses, all the stuff, and she would go bankrupt and she would not have anything left. So we had to go and negotiate with the bank. And first the bank said, no, we have collateral and we will take everything. And then we agreed at least that the bank could get more money out of these two persons selling the stock in 6 months to, you can say, sale and everything, but the bank's alternative was to take the full stock. Then they would have a lot of boxes with clothes in their bank, and they could see what they could get out of that. So we made a deal with the bank that they would leave her personally collateral against her selling the clothes for the bank in their shop. And in this way, we closed down slowly over 6 months the male part of this company, and she has now a very good job as a manager of a shop in another area of the country, and she's very, very happy. So we saved her. We saved not her business, but we saved the other person's business. I don't know if that makes sense. It's difficult to explain because it was quite complex. But it's both about understanding what is good, can we take that out, what is bad, and what can we do about it? Can we negotiate with banks and so on? And we were very tough at the bank. We were just with the key saying, here's the key to the stock. You can pick up the clothes yourself, or we can help you selling this for a good price so that you will have most of your money back. And the first bank guy, no. The next bank guy, and the last one said, yes, please help us out with this. So it was quite tough, and they could never have done it because they were so involved, so emotionally involved in it. So it has to be some old gray hair guy who really took the meeting with the bank and say, this is how it is.
I have one question here. What was the problem that they are in the bankruptcy? It was the location, it was the market. What was the problem that?
With the one part of the company.
Yes.
Well, the thing was that, as a matter of fact, it was because the accountant have made a mistake, and this mistake was repeated month by month by month by month because it was a wrong formula. So they thought that the business were okay, but what she could not understand, she was running out of money all the time. But the business looked okay on paper until we find out that there was a mistake. So she was, as a matter of fact, selling too much on sale and things like that compared to the business. So it was not a good business, but she could not see it because clients came in, they bought the clothes, they were happy, she had money in, and so on. But half a year later, 1 year later, and so on, it's funny that I do not have any money, and but you have bought a new clothes for the new season, and you have just had a sale, and it really is difficult, especially the clothes, I'll say, to make sure you really understand your business. And because of this mistake from this accountant, she was blindfolded in principle.
But there's just so many things in that story that are typical for the companies that we see in our operation, as you described them, Anders. I mean, first of all, you have the over reliance on an accountant, because it's the same as saying that the owner of the company doesn't have the overview to actually control what the accountant is doing. And if you rely so much on an accountant, I mean, in this case, the person is doing a bad job. It could be any other problem. You could have a conflict with the accountant. It could be anything. Then there's this lack of overview. I mean, they don't have the overview of how much money they're actually making. But in other cases, we see they don't have the overview of the product flows in the company either. I mean, how many days is each piece of clothing in stock? How much does that cost? What's the total value of the stock binding? How much do you have to write off? Because, last year's fashion is usually not worth a lot of money and so on. If you start by having that overview yourself and not relying on a bookkeeper, an accountant, a sales manager, or someone like that to have it, I think that's a good starting point for having a resilient company.
No, you're right, Morten. But again, that's back to this about having a team around you, because these two ladies, they were damn good at selling clothes. They were damn good at making a good experience for the client. They have a lot of customers. Everything was good, except from that they might have a wrong price point on some of the parts of the shop. So you cannot be good at everything. Then you will be this medium person knowing a little bit of a lot of things. They were very good at what they were doing, but they needed some people, like Morten say here, who have the overview to help them. How do you run this kind of shop? And I think that the one was just more lucky than the other, because there was not more control in that part. That was maybe easier because it was women's clothes. I don't know if they are more willing to pay the price. I don't know, but it was a little bit of a coincidence that was the case, that the one was bad and the other one was good.
Yes, you are right, because in the textile field, the women are buying much more, and I
maybe
was
willing to pay a little bit more.
Or that, yes. I was curious about because yes, selling the stocks is the options, and I was curious about the strategy of selling, because they are making discount. How was the strategy of selling that stock to recover the bank?
Well, the thing is that if the bank took the full amount of stock, they will have to sell it as a stock sale, saying we have all this clothes, different type of trousers, everything, and they might get something like 10% of the value, because people wanting to buy all this stock, they will have a very, very huge discount. So if they should sell the full stock to some on an auction or whatever, it might be 10% of the value. What they could do, they could say, well, we are not closing down, because we did not tell everyone around us that we had a problem with the company. So they just made, sales. Today we will make a live on Facebook, and I don't know what, but we have a good offer for you. So they could sell maybe to 70% or 50% or whatever. And of course, the volume went down, and they had to say, well, now we are closing down the business. This is business lockdown sales on the mail part, and maybe they were down to 40% of the price, but still much, much, much more. And I think that, as I remember, the bank was fully covered off on this. We had, of course, to make a cut on some of the suppliers and things like that, but we made a negotiation with suppliers and with the bank and make this, because we need to treat, that's a regulation we have in Denmark. You cannot treat one creditor better than the other. Maybe it's a worldwide no standard, I don't know. But you cannot say, you will have half of the money, you will have full of your money. That's not allowed. So we need to make an agreement with all creditors and the bank that we will give them equal amount of their money back from what we sold. And everyone has to say, yes, this is better than nothing. We will have a haircut, but it will not be nearby as much as if they go bankrupt.
You said about the new location. How is the company in the new location?
Well, the one part which was left, she stayed in the same location and still have a very good business. I'm speaking with her frequently. Nice. And the other, she moved to another part of the country for other reasons. It has to do with divorce and so on. But now she's a shop manager in a huge shop in another area of Amanda. Have a very good salary, and everyone is happy.
So you share a story with not so experienced entrepreneurs, and it was a good story because these are the startup entrepreneurs. They have an idea, they want to make a business, and they face some kind of difficulties. And this is a study case that it's good to be put on the table because we can learn from that. So thank you, Anders.
One of the core points of Anders' case is that we come to these entrepreneurs, they're passionate about their trade, they're passionate about fashion, about, trends in the market. Bakers really want to bake bread, and retailers really want to sell things and so on. But nobody is passionate about all the boring things that make the management sustainable. Having good budgets and making sure you dominate your contracts and all these things. I mean, it's hard to be passionate about that, and that's where it goes wrong.
Yes, but if we think all the businesses start from a passion, so that is the main point.
Precisely. But if you want to live out your passion, you need to make sure you're not going bankrupt.
Yes.
So it's also about making sure that your passion is evolving to a very good, strong business. And that's the same as driving a car. I mean, if you also need to make sure, even though you like to drive, that you also have brakes in your car in some kind of way.
Thank you all for such insightful contributions. We've seen how prevention, mentorship, and strategic intervention can play a huge role in keeping businesses on the path to success, whether it is in Denmark or in Romania. We are especially grateful to Morten for bringing such an experienced mentor like Anders, whose insights have truly enriched today's discussion. So if you are interested in joining our community and learning more, click the link below. Thank you for tuning in, and we'll see you next time.